Good morning, everybody. Welcome to our webinar. Hopefully you'll find it informative and interesting, and thank you for joining us. You won't actually be seeing me apart from my little picture at the bottom there, because my fellow partners told me I had a face for radio, so I'll just be talking over some slides as we go through. Please feel free to post any questions and we'll try and answer them as we go along, or otherwise we will catch up with you after I've done this presentation. It was always going to be an interesting budget, and one we expected where there would be spending increases for the public sector, because let's not forget that the red wall, those traditional Labour heartlands that voted for the Tories this time, would be expecting something in return. Also, it's slightly unusual because we were all expecting Sajid Javid to presenting his first budget, and in fact we haven't got him at all. We've had Rishi Sunak doing his first budget. In fact, just an interesting fact that Sajid Javid is the only second Chancellor in history to never actually present their first budget after being made Chancellor. The only other chap was a guy a long time ago who unfortunately died before he could present his first budget. Thankfully for Sajid, that didn't happen. Anyway, obviously the headline for all of this is COVID-19. And that's thrown a kind of curveball at the Treasury, and I'm sure the mandarins were working late into the night, burning the midnight oil to basically look at what responses the government could make to what is now a pandemic. So the Chancellor has responded by pledging £30 billion to respond to the disruption caused by COVID-19. If you'll look today, or you may not want to, the market's significantly down again, and President Trump has just announced restrictions on travel to the US from 26 European countries. Currently that doesn't include the UK, but who knows what might happen in the next few days. They've also just recently announced a 0.5% cut in the base rate, and banks have announced some relief for mortgage payments for a deferral for 3 months. Whether these measures will work, who knows? It's very hard to stimulate demand. You might put a few more pounds in people's pockets, but they're not necessarily going to then go to the pictures, a concert, or say, wow, let's have a long weekend in Rome, given the current circumstances. So what did the Chancellor announce yesterday? Firstly, he announced a 1-year suspension, a relief from business rates for small businesses in the leisure and hospitality sectors, so small shops and cafes. I mean, business rates are an area that need significant reform and have needed that for a number of years. But this is just a temporary measure to assist those small businesses, because people might not be obviously popping in as much as they were previously. Also, the government announced that they will pay for up to 14 days sick pay if you're ill due to the virus, but that's only for employers with less than 250 employees. They also announced similar measures for those who are self-employed or in the gig economy. The Chancellor also announced that he was going to increase the employment allowance to £4,000 from April. At the present time, it's £3,000, and this gives relief on employer secondary class 1 contributions. He also announced an increase in the threshold for the liability to national insurance. Currently, that's £8,632 before you pay any national insurance, and that's increasing to £9,500 from April. According to the Treasury's figures, this will take 500,000 people out of the tax net altogether when combined with the personal allowance for income tax purposes. There were also, in terms of employees, The new rules for IR35, which we've already known about, but they come into force from April, which widen the net for IR35 and effectively impose on the private sector, in terms of large companies, what has already been in place in the public sector. And I know this is causing some concern for a number of clients of our firm, and no doubt across the board. Infrastructure. This has been widely signposted that there would be more money available. The Chancellor's got his checkbook out in relation to infrastructure spend. So yesterday, the Chancellor announced 600 billion, I'll repeat that, 600 billion pounds for roads, rail, broadband and housing over the next 5 years. Within that number, there is 27 billion for motorways and arterial roads. Maybe some of that will be spent putting all these smart motorways back to what they were before. Also within the measures are £2.5 billion for repairing potholes. If you, like myself, commuting, driving to work every day, you'll have memorised every pothole on your route in and your route out to avoid them. They're an absolute disgrace. So that's got to be welcome, albeit some people may say it's just a gimmick, but I think it's necessary. And also, on a far more serious note, these pledged £1 billion to remove unfit cladding from high-rise buildings in light of the Grenfell tragedy, and that's a much welcome measure, but they do actually need to get that sorted as quickly as possible, because some people are trapped in flats that are unsafe and they can't sell them. Entrepreneurs relief, obviously an issue on everybody's minds if they own a business and have spent many years building that business up. Again, it was widely signposted in the press about the fact that it would probably be scrapped at worst, or certainly tinkered with. When Entrepreneurs Relief was initially introduced, the Treasury forecast that it would cost them around £450 million in lost tax receipts, but that cost has spiralled in their view, and it's now in the billions of pounds. My view, before we heard what the Chancellor had to say yesterday, was that they would reduce the lifetime limit from £10 million for the 10% tax rate to £5 million. However, he's gone further. He's actually reduced the level at which you pay capital gains tax at 10% to £1 million. That's a significant drop from 10 million to 1 million. But if we cast our minds back, that was the level it was set at when it was first introduced. And there's always been something for all years for people selling a business, from retirement relief through business asset taper relief to entrepreneurs relief. So scrapping it, I never thought was perhaps on the cards, but it's now £1 million. And that actually applies from midnight on the 10th of March, so it's slightly retrospective. My view was that he should have reduced the lifetime limit and then possibly delayed that introduction of that until April 2021. That would have given people a chance to dispose of their businesses if that was on their agenda, and it would have accelerated tax receipts for the Treasury. But he's chosen not to do that. So what does it actually mean in number terms? Well, if you sold your business for £10 million and you made a 10 million gain, previously you would have paid £1 million in tax and walked away with £9 million in your pocket. The tax you'll pay if you sold today for £10 million will be 1.9 million, so £900,000 extra. A significant additional tax receipt. I also know that a number of people, given the speculation around entrepreneurs relief, entered into planning to try and capture their £10 million entrepreneurs relief and lock into that level of relief. A number of people introduced a new holding company structure or entered into rescindable contracts with a counterparty, normally a type of trust. Well, unfortunately, the revenue are aware of this, and they have introduced anti-avoidance, which basically means if you unfortunately did undertake that type of planning in the last month or so, that won't work, and that will be unravelled under their anti-forestalling legislation. The Chancellor said that the reduction to £1 million will only affect a small number of people, i.e. most people sell for £1 million or less. I'm not sure that's right. I'm sure they've done their research, but I know anecdotally for the sorts of transactions that we've undertaken here at KJG is that most of those are in excess of £1 million. In terms of other tax areas, very little change. Personal allowances and the tax bands for income tax are all staying the same. He has increased the capital gains tax annual exemption from £12,000 to £12,300, and the rate of corporation tax is staying the same at 19%. What this does mean is that there will be an increase in tax payable. If people are awarded a pay rise, an inflationary pay rise, and personal allowances stay the same, then they will pay more tax. That's called fiscal drag. So there is a little bit of tax raising going on there. And also, people might just need to be made aware that from April, if you sell your buy-to-let property, you'll pay 28% capital gains tax on that. That's the rate that applies. You actually now have to notify the revenue and pay the tax within 30 days of completion. I'd imagine a lot of people will possibly miss that and end up in a penalty position. The NHS. What the Chancellor said when he stood up yesterday was it will get whatever it needs, whether that's millions or billions. A commitment, again, that signals the end of austerity. He promised £6 billion over the life of the current Parliament to fund 50,000 new nurses, more GP appointments, and to start work on their heralded 40 new hospitals. So no surprise there. And also, if you overlay that with the current COVID-19 issues, not a surprise. R&D, research and development tax credits, are very, very valuable relief, and we do many claims for our clients. For every £100 a company spends on R&D, the government gives it an extra £130 relief if you're an SME, a small medium enterprise. And also, if your R&D activity ends up creating a loss for tax purposes, you can either carry that forward in a normal way and use it against future profits to reduce your tax bill, or you can sell it back to the government for cash, which, if you're in a startup situation, is very valuable because it helps your cash flow as you burn through that cash, developing your product or process. The Chancellor announced that they would increase the investment in R&D to £22 billion per year, and the tax credit for the large company scheme, which is called the RDEC scheme, has been increased from 12% to 13%. However, there is a change coming in, not this year, but next year, and I didn't see any announcements concerning this, but there is going to be a restriction where people claim a tax refund, a credit refund, is that they're going to restrict that refund to 4 times the UK payroll costs. Now, that will have an impact on those who subcontract out their R&D. India's quite a common place for that to happen, because that, despite what you're spending on that subcontracted R&D, your credit refund will be restricted. Pensions, again, something that's been in the press widely about whether they would abolish high rate relief. That's if you're a high rate taxpayer, you get your pension tax relief at your highest rate, which costs the Treasury about £7 billion a year, but only helps a small proportion of the population. So that was something that I think has been on the agenda. People have been thinking it would be abolished for a number of budgets. That's still not happened. And equally, they've not cut back on the 25% tax-free lump sum that you can take out of your pension. That all stays the same. However, people have probably seen in the press that a number of doctors were not willing to work more hours for the NHS because that meant they were actually hit with a large tax bill because of their pension arrangements. So before yesterday, if you earn over 150,000, the most you could put into your pension was £10,000 gross. The starting point of what you can put into a pension per annum is £40,000 gross, or about £32,000 net. And those tapering rules from £40,000 to £10,000 kicked in from £110,000. What the Chancellor announced yesterday was a relaxation of these rules for everybody, but it obviously affects those doctors I mentioned earlier. And that the £150,000 limit is going to be increased to £240,000. I think this is a welcome boost and an opportunity for people to top up their pension savings following many years of restrictions. And it may well be that this dovetails or interweaves with the restrictions on entrepreneurs relief, because I would imagine a number of people will now possibly delay the sale of their business until it maybe increases further in value, because they can make up for the extra tax they're going to pay. And it means that people will have an opportunity to possibly increase their pension contributions as a way of extracting some value from their companies. The climate, again, something that is all over the place in terms of publicity, commentary, etc. Rita Thunberg, etc., saying that we need to stop relying on fossil fuels, etc. So it's headline news. And the Chancellor announced yesterday that they would introduce a new plastic packaging tax from April 2022. And he also announced £1 billion for green transport solutions. There's also going to be £640 million for natural habitats and for planting new trees. And apparently that's for 30,000 hectares of trees, which I'm reliably informed is about the size of Birmingham. I don't know if that's true, but it's a lot of trees. And also £800 million for carbon capture measures. So the government is responding to the dialogue around climate. Whether people think that goes far enough, no doubt that commentary on that will be made. For the drinkers amongst us, the Chancellor has frozen duty on beer, spirits and cider until 2021-22. Unfortunately, for smokers, there will be a 2% increase in a packet of 20 from last night. And also, given the pub sector is struggling again, particularly with the COVID-19 problem, the business rates discount for small pubs has been increased fivefold to £5,000. So, in summary, it wasn't a budget that tax practitioners like myself like. We like lots of tax changes because that gives us something to get our teeth into. The changes to entrepreneurs relief were widely heralded before. The changes to pensions were signposted before. But again, this was a budget about the end of austerity and the response the government can make to COVID-19. I hope you've enjoyed that brief commentary on what the Chancellor said yesterday. If you want to know more, please go to our website. If you want to get in touch with myself, please feel free. And thank you for listening.